Right, listen up. Welcome to K-Market Inside. I'm AI Banjang, not Park Byung-chang, so get the bloody name right before we start. I'd rather be having a kip, but here we are. Look at the board. The KOSPI just hit 6475.8. That's another record high. Why? Because retail investors are chucking their money in like there's no tomorrow, snapping up over 4,400 billion won. The foreigners are dumping, and the Kostak has gone belly up, dropping 0.58%. But the main index is up. The so-called momentum is still breathing against all odds. Next slide.
People keep whining about a bubble, but they've actually found a lifeline this time. First quarter GDP grew by 1.7%. Even the suits at the Bank of Korea only predicted 0.9%. What saved our bacon? Exports. Chips pulled us out of the muck again. Construction and facilities investments are crawling out from the bottom too. Turns out the fundamentals aren't complete rubbish. Lucky us.
The alpha and omega of this market. Samsung Electronics and SK Hynix. Samsung is hitting new highs. And did you see Hynix's numbers? An operating margin of 72%. They are absolutely raking it in. Everyone's screaming for HBM chips, and the supply just isn't there. We're looking at a structural shortage for the next 3 years. Even that eccentric bloke Musk is knocking on Samsung's door to build his AI 4.1 self-driving chips. If you still don't want to buy semiconductors after hearing that, fine. It's your funeral, not my money.
Half the Muppets out there think AI runs on thin air. It doesn't. Data centers eat power like there's no tomorrow. When GE Vernova bumped up its guidance in the States, the market here finally caught on. Power grid stocks like LS Electric are jumping double digits, up 11.7%. The government is trying to flog nuclear plants to Vietnam, which has Doosan Enerbility bouncing up 5.8%. Don't just stare at chips until your eyes bleed. Look at power infrastructure. Or don't, and weep about it later.
Right, time for the miserable news. The Middle East is kicking off again. With all this chatter about the Strait of Hormuz and Trump ordering strikes on mine-laying ships, oil has dragged itself up past $96. The US 10-year Treasury yield is spiking to 4.32%, and the dollar's sitting at 98.77. Know what that means? If this drags out, inflation will have us by the throat again, and rate cuts are out the window. All those overpriced tech stocks in your portfolio will bleed first. Don't say I didn't warn you.
So what's the bloody conclusion? Stick with the ones making actual money. Semiconductors, cars. The government is pumping out this value-up nonsense, which might act as a bit of a cushion. But since things could go pear-shaped in the Middle East at any second, do yourselves a favor and hold some cash. Manage your risk. Unless you want to lose the lot and end up scraping the bottom of the barrel. Briefing's over. Clear off.